guys here. You're welcome to a day with an ICT trader. Okay. Please, if you're new to this channel, do well to subscribe. Okay, do well to subscribe. We'll be releasing forex educational content back to back. Okay, on this channel. And if you're dedicated to following us, definitely you're going to learn a lot seriously because we are committed to changing the forex educational narrative. Seriously, we change forex educational narrative. Okay, I'm an ICT trader. Okay, I trade ICT concepts. Right, basically I trade just one model, right? And I think it's one of the reasons why I'm consistently profitable. Okay, I think I can remember when I was still struggling to be profitable. Okay, change like switching from being a normal retail concept user, okay, like this normal general concept trend and the rest of it. Okay, I think I'm good in it. Okay, then I think transposing from becoming an ICT trader, I think it's actually good. But from this, I know that technical is not actually the problem. Okay, I think the strategy is not the problem, but you, the trader. Okay, because I always tell some person the profitability you seek is actually in your mind. Okay, it's actually in your mind. Okay, not in the strategy. Okay, so me testing normal retail concept and also is an ICT this thing. I think they're no different. Though I think I have money rates with an ICT concept, right? So I'll be releasing content back to back every single week. Okay, and today is Monday. Every Monday we'll be releasing pre-market analysis, right? Just like that, what we'll be doing today. Pre-market analysis. We'll be going into the market, see where is price coming from, where is price going to, and where is the next on liquidity. So we'll be anticipating the next direction of the market and see how we're going to trade and make profit off it, right? So if you are new to this channel, please do well to subscribe for your boy. Subscribe for your boy, subscribe, okay? And like. Also put the bell notification button on so that you'll be notified anytime we post on our YouTube channel, okay? So and maybe going to the market and analyze. Basically, we'll be analyzing the XY, okay? The XY because I know it has many correlation with a lot of pairs, right? A lot of currency pairs. It's correlated with a lot of currency pairs, and Euro USD is the most correlated pair with the XY, and that's why I trade only Euro USD. Okay, I think I'm going to make a video on. I'm going to make a video on that, right? I think it's going to help a lot of persons because I was struggling when I was trading many pairs, but since I stick to just one pair, I think I gained consistency. That's when I started getting consistent profitability in the marketplace. But before, I would just make money and still lose it back. Maybe I make money from this pair, I'll lose it back on this pair, and now having a problem. I know most of you are having the same problem, like you're still struggling. Okay, so maybe I'm going to make a video on how I stick to one pair and how you can do that, and also make the most out of it. Okay. So today we'll be analyzing and doing pre-market analysis. Okay, pre-market analysis, we always do that every single week. Last week I did it and you can see like we made a lot of profit. Okay, we actually analyzed the XY and Euro USD and anticipated the direction with confluences, and guy, you need to check the chart. We make the most, like I think last week one of the days we used to have high win rates, about 100% win rate, 90, okay, let me say 90% win rate. Okay, last week, like, but the three trades I took was excellent. Like it's delivered beautifully well, right? Because we just analyzed and trade in that direction. Okay. I just want you to have this before we go to our charts that see my price is not random. Okay, price is not random. Price books measured based on liquidity. Okay, if an ICT trader, you should know this. Price books measured based on liquidity, and whenever I say price books measured based on liquidity, you need to understand this, that price books from one liquidity level to another. In a simple put, price books from an internal liquidity to external liquidity and vice versa. Okay, so I don't know, most of you may not relate. Maybe if you're not an ICT trader, or maybe should I say an SMC trader, because if you're still an SMC trader, you still understand the concept I use. Okay, but if you don't, maybe you cannot relate with the concept I use, please do well to join the UFI Trading Hub channel. I'm going to put the link in the description below. Okay, join the Telegram channel. I have a lot of free classes. Like, no matter any strategy you trade, seriously, if you go through these classes, it will change your trading narrative. I have a lot of testimonies. A lot of testimonies. Okay, the first class was IUF Simplified, Institutional Order Flow Concept. I think that's what, as a trader, that's the first thing you need to know. Right? To me, like once I learned that, I know this is actually what every trader needs to learn first. Once you want to understand technical analysis, how price moves and why price moves the way it does. Okay, and how price books in institutional perspective. Okay, so I think order flow is the king to me. Order flow is the king. Once you understand order flow, understand the structure of the market, and they add it with your entry strategy, you're good to go, right? You don't need all the knowledge. You don't need I think that's one of the mistake the upcoming traders do. They try to learn a lot of things, right? You don't need all the knowledge, but the thing is, how will you know the one that works if you have not learned a lot of things? Okay, so that's why maybe if you learn a particular from a particular person, okay, maybe the person will just teach you a specific thing that you have known that work for him. Then your work is just to implement and make the most out of it. Okay, you don't need all the knowledge, you don't need support and result, you don't need all of them, right? If it is support with trend and work for you, stick to it, you're profitable. Okay, remember everything works in the marketplace. Okay, it works in the marketplace. You understand? But the main thing is just know that the profitability you seek is your mind. Okay, I think I'm going to be giving more psychology tips as we go on. Okay, so today we'll be analyzing the market. We're going to the chart, then we'll be analyzing the XY. Okay, then you can maybe if you trade GBP USD, if the XY is bearish, right, you should be expecting GBP USD to be bullish. Do you understand? Okay, so basically I start from the weekly time frame. Okay, I normally look at the chart from the weekly perspective. Then I will use the daily time frame to determine my directional bias each day. Okay, to determine my directional bias. Though my entry is always in the lower time frame, like 5 minutes. In fact, I even trade from the 1 minute time frame, but I trade in line with the daily direction bias. Okay, so I'll be showing you guys how we can determine that from the chart. Okay, so we look at the weekly time frame, determine price from a liquidity level. So we ask for once we get to the chart, we ask this is the major question you ask. Okay, like if you want to determine the direction bias, you ask the three major questions. Number one is where is price coming from? Okay, where is price coming from? So you should know where price is coming from in terms of liquidity levels. We have an external liquidity and internal liquidity. Price is always doing two things. It's either it's taking out an external liquidity or it is repricing an internal liquidity. Okay, and the two major internal liquidities I use is and LVG and other block. Okay, we have a lot of internal liquidity, just like mitigation block, proportion block, and the rest of it. Okay, but I don't use all these. Just two significant ones that works for me, which is LVG and other block. Okay, so that's the major ones you'll be seeing me using. Okay, so price books measure based on liquidity from internal liquidity to external liquidity, from external liquidity to internal liquidity, and vice versa. That's how price books, guys. And seriously, in fact, just join the Telegram channel. I think you're going to learn a lot. You will learn a lot from the chat. Okay, where I taught about institutional order flow simplified class. Go through the institutional order flow simplified class. Also go through the chart mastery class that I just concluded maybe few weeks ago. Okay, I think you're going to make the most out of it. Okay, so and as always, if you have question, I think my DM, I have a link to my DM there. I think it's either WhatsApp. Okay, you can always ask me question. Okay, I'm a successful trader, but it's not that I'm not blown loud. I'm not blown, like I'm not driving anything, but we are getting there. Okay, we are getting there bit by bit. All right, so stick around. You're going to learn a lot. So let's go to the chat and see what we have for the week. All right, guys. I welcome you all to the chat. I hope you can see very clearly. Okay, and this is the XY. I have the XY here. I have Euro USD. As you all know, I only trade to one pair, sorry, which is Euro USD. Okay, but I use the XY. You know, the XY is just like it actually controls the move of the major pairs. Okay, and it's correlated with the other major pairs like GBP USD, AUD USD, and the rest of it. Okay, USD card, right? But Euro USD is the most correlated with the XY. Is the most correlated. So what did I do? I normally go into the XY, go to the DXY and look out for okay, what are the brown liquidities? Where is price doing in the XY? Where do you think that price dollar is going to go next? Okay. So once I determine where dollar is going to go next, right, then I will go to Euro USD and look out for the same thing but in opposite direction. Okay. Like for example, if I'm expecting dollar to go down, okay, that is the XY to go down. So what are we doing is when I go to Euro USD, I would be expecting Euro USD to do what to go up because I'm expecting dollar to go down. Do you understand? And most of the time they do almost similar things, but in opposite direction. Okay, so that's how I use it. And you also use it to determine, let me say, the smart money technique. Okay, if an ICT trader understand what I mean, okay, like you can use it to detect reversals, just like what we have here, right? Where we have this high was taken by this candle, but in the X side, it wasn't taken. Okay, so whenever you see this kind of stuff, you know that okay, the institutions are already in the market. They want to manipulate price. Maybe it indicates majorly it indicates reversal. Okay, let me not like bore you with a lot of explanation. Okay, you use this to indicate reversal, where you can see
the XY failed to take out a low, okay, but Euro USD take out a high, right? So you can use it to detect reversals. So some of the key things you also note here is this kind of candle, a candle with small body range. Okay, now I'm going to be making a separate video about that, and the video actually I think I've explained it in the Telegram channel. Okay, so do well to join our Telegram channel. Okay, everything there is free of charge, right? It's free, so you go through the classes and make the most out of it. So you can see a contraction candle. Contraction candle is candles with small body range. Okay. So whenever you see a candle with small body range, you should be expecting an expansion. And that is how we caught this whole movie last week, because we saw this contraction candle, series of contraction candle 3 times. Also, okay, you should be expecting an expansion next, and that's what happened. You can see another one, contraction candle, and this is today already, which is Monday. You can see an expansion to the downside. Okay. So that's how price books. Okay, so you use these things together and anticipate, okay, this is what we're expecting, this is what we want to see in the marketplace, this is what we're expecting. Do you understand? Okay, now let's go into to the XY and say, okay, let's know what to be looking out for the week. Okay, so whenever I want to do my pre-market analysis, so the first thing I do is I go to the higher time frame, majorly the weekly time frame, because I'm a day trader. Okay, should I say more of a session trader, because my trade normally just at times my trade can deliver 20 minutes, 30 minutes, an hour, 3 hours. The maximum is 5 hours. Okay, maybe the day is like market is just ranging, but most of the time the average time this in my setup delivers is 2 hours. Okay, within 2 hours it will deliver. Okay, so that's what I always do. So now looking at our price, if you look at the XY from the weekly perspective. Now, the first question we ask ourselves is, where is price coming from? Okay, that's the first question we ask ourselves. So if you want to determine the direction price, so you ask yourself, where is price coming from? Where is price coming from? Okay, so now before you answer that question, you should have this in mind, that price books majorly based on liquidity. Okay, price books majorly based on liquidity. As you all know, price moves in waves, right? Like this, moves in waves. Okay, let me just do a quick explanation. So moving with, so whenever let me say what characterizes an uptrend is when price is making series of higher highs and higher lows, right? While downtrend is when price is making series of lower low and lower highs. Okay, so you can see whenever a high, this is a high that gave us this low, and this is another high. Okay, so this high took out this particular high to create its own high. Okay, thereby you call this a higher high. Okay, because this high is higher than this. Okay, but why do price move this way? Why doesn't it move in a straight line? Okay, it's very simple, because price books measured based on liquidity. How external liquidities are resting here. Okay, at this high, external liquidity are resting there. So whenever price come after price takes good reprice and internal liquidity, it will reverse to take out an external liquidity. So what the liquidities are cleared, what do you look out for? You look out for a reversal pattern, okay? Then price will return to reprice internal liquidity. So whenever price take out an old high or old low or relative equal highs, okay, you'll be expecting a reversal. So when a reversal happens, what do you expect? You'll be expecting price to return into either an internal liquidity, which is either FVG or other block. Okay, so just go through the Telegram class and you can learn what is FVG there and also another block. Okay, if you're not an ICT student, you understand, but I think it's very important to go through it and understand, right? So internal liquidities are rested here. So if you understand, so you can see price retest it. And now after filling the internal repricing internal liquidity, what do you expect? If you're looking out for reversals, and price will expand to the upside, okay, to take out what an external liquidity. Okay, so everything about this concept is explained in my Telegram channel already. Okay, I have two major classes, three classes in the Telegram channel there. I have the iOS simplified class, okay, which I explain a lot of things there, right? I explained a lot of things, and like iOS simplified, iOS simplified. All right, then also the recent class I conducted, which is a chat mastery class, okay, also go there. All right, you're going to learn a lot, seriously, I promise you, you will learn a lot. And once you learn, you can always come to the comment section here and tell us what you learn and how it's changing your trading game. All right, also if you stick to this channel, you're going to learn a lot. Okay, everything you need to prepare, I'm going to be uploading here back to back. Right, so now looking at price, what are you expecting? We're expecting external liquidity have been taken, price returning to internal liquidity. So once we see a reversal pattern, then we see what an expansion to the upside. What is a reversal pattern? What do you look out for? You look out for a swing high or a swing low. So this is a swing high. A swing high is made up of three candles, one, two, three. So the high of the center candle should be higher than the high of the left and right candle. Okay. White swing low is made up of three candles too. Understand? Just like this. Okay, I see one, two, three. So the high of the low of the center candle should be lower than the low of the first and second candle. Okay. So this is swing low, and you can use it to determine reversals, okay? Determine reversals. So that's it. Another way to determine reversal is a classical breaking market structure, okay? Like for example, price is going making series of lower low, lower high, lower low, lower high, okay? And you want to see a classical breaking market structure, you can see the high that gave us a recent low should be taken and price will return into it. Then it means the directional bias have changed, okay? So you can use this to determine your reversal. So okay, but majorly I use my daily time frame to determine my daily directional bias. Okay, what I always do on the weekly time frame is to determine where is the drawn liquidities. Okay, that's the liquidity areas. Okay, in the higher time frame, which is the weekly, right? And whenever I trade from in my daily time frame, my direction bias, I trade into the weekly perspective level. So I should be expecting a reversal, possible reversal, okay, or a possible reaction to make price move in opposite direction most of the times. Okay, so that's why I actually look at the weekly time frame and relate it with what we have in the daily time frame to determine the directional bias. Okay, so now looking out, having at least with this knowledge, you know that price moves majorly based on liquidity, right? We know that price moves majorly based on liquidity, from internal liquidity to external liquidity. So looking at, you can see price came from this. You can see this is an order block. Okay, contraction candle. You can see this is the main order block. Okay, this it reach out for this one, and that is after taking this external liquidity, which is this low. So price expands to reach for this other block and expand to the downside to the external liquidity, which is this low. So you can see internal liquidity, external liquidity. All right, taken. So now externally have been taken. What are you looking for US? Last week we if you can go through the last week pre-market analysis I uploaded. Okay, it was actually a Zoom class that I uploaded on my YouTube channel. Okay, go through it. You can see we anticipated a reversal. Okay, and we made the most out of it last week. So I anticipated a reversal last week to the upside on the XY, and that's what that happened. So we had what a reversal to the upside, and price expanded to the upside. Now, when I have expanded to the upside, then it created what a gap. You can see this gap right here. Okay, you can see. You can see this gap, okay? This is what we call it an FEG, okay? So this is an FEG, so price expanded into an FEG, okay? So that's the anticipation, okay? Because price books major based on liquidity from internal liquidity, external liquidity. External liquidity taken. So what do we look out for? We look out for what the internal liquidity is formed, which is number one, an FEG. An FEG is just a gap in price, okay? It is made up of three candles. Maybe when price is moving to the downside, made up of uh, the gap between the close, like okay, the low and the high of the first and last candle respectively. Okay, the gap between this low and the high of this third candle, the gap between them is called what? An FVG. Okay, the general name is FVG, but this one you call it a CB. Okay, that's sell side imbalance, buy side inefficiency. Sell side imbalance, buy side inefficiency. Okay, so you can see price it created this high. So this week now, what are we looking out for? So I'll be looking out for price to what expand to the upside to take out this previous week high, which already have been taken. Okay, already taken already. So I expect this high to be taken and price expand to the upside. Okay, to fill this FVG. All right. So that's my anticipation. That's my expectation for the week. That's my expectation for the week. Price to fill this internal liquidity and possibly reach for this other block. Okay. But number one is to fill it to at least the center of that FVG. Okay. And see, let's use our fib level. So if you use our fib, what is this? The middle of the FVG, you call it consequent encroachment. So price will definitely most likely reach this. Sorry, guys. All right, so the center of this thing, you can see constant equation, so you can possibly reach here, then probably fill it completely. Okay, so that is my anticipation for the week. Okay, I'm expecting an expansion to the upside to fill this. So once maybe this is filled, then we'll be looking out for a reversal to them. Okay, so that's it, guys. So I'm more bullish on the weekly perspective on the XY. So therefore, in the weekly time frame on Euro USD, I should be what expecting an expansion to the downside. Okay, so the same narrative we have here, you can see external liquidity taken and price have taken expanded to the downside. So previous week low taken, you can see a gap created here. So I expect price to fill this gap and possibly reach for this here, okay? Possibly reach this low. I want it to reach here at least, okay? Because this is a kind of a mitigation block. So it can reach here. Okay, normally you can say maybe some people that uses normal retail concept, you can see they will call this a support, right? So I'm expecting price to reach to this support right here. Okay, but remember to fill this LVG, this gap right here. Okay, so we're expecting an expansion to the downside. So that is it, guys. So that's what we are looking at in the weekly perspective. Now let's go to the daily time frame. You know, daily time frame, that's what we use to determine our direction bias. Okay, so we have been buying since last week. I've been buying since last week, Wednesday, right? I've been buying. We bought Wednesday, Thursday, and Friday, okay? And today, which is Monday, you can see this high has been taken, okay? That is the previous week. That is the Friday high has been taken, okay? So my expectation is for price to return into at least this FBG here, okay? Because why this one? Because this is the 50% of the range, okay? Whenever external liquidity is taken, you draw your fib. Okay, once you draw your fee, look out for at least we expect price to reach at least the premium level. The premium level, okay? Premium level is the level above the 50%, that's equilibrium level of the fib, okay? So this is the equilibrium 50%. So the next long liquidity at above this 50% is this FBG here. Okay, so that's why I expect price to at least reach out for this particular to reach out for this at least particular FVG. Then you can see another FVG here and this one. So it may keep expanding to the upside after that, but the first real liquidity is this FVG right here. Okay, so that's what I'm looking at for. Okay, so probably now price may trade the low of the week. Price may trade the low because we're expecting bullish expansion for the week. So we're expecting a bullish expansion for the week. So price may reverse to the downside to create the low of the week. Okay, depending on how today closes. But if you look at closely, you can see a gap right here. So so we call it BC. That is buy side. The general name is FVG. That is fair value gap. But it's when you want to make it peculiar to the direction, you can say call this BC. Okay, buy side imbalance, sell side inefficiency. Okay, buy side imbalance, sell side inefficiency. So in short form, we call it what BC. You understand? So that's it. So price, I'm expecting price to do what? To return to this, probably return to this and what expand to the upside. Okay, but remember the drawn liquidity is this high. Okay, so what I'm going to be doing is to buy. Okay, no matter anything, buy to buy until the draw on liquidity, which is this is met. Okay, so that's it. So even if we have a pullback, then we only see a pullback into this gap here, then we continue to the upside. Okay, so that's what I'm looking out for this week on DXY. Okay, I'm more bullish on DXY this week. Okay, the same this narrative but opposite direction in Euro USD. Okay, the same narrative. Let's go to the daily time frame. Okay, you can see, yeah, I'll be milking to the downside. So you can see this gap. You can see this gap. So price actually popped into it today. Price actually popped into the then expanded to the downside. Okay, so maybe probably tomorrow, Tuesday, most of the time, if you're an ICT trader, you can see you know that most of the time that the high, if you're expecting an expansion, a bullish expansion for the week, the high of the week mostly from if you're expecting a bullish expansion for the week, the low of the week mostly from that Tuesday or Wednesday London section most of the time. Okay, not 100% of the time, but most of the time the low of the week form on Tuesday or London cues on Wednesday. Okay, most of the time. Okay, if you're expecting a bullish expansion in the weekly time frame, right? And if you're expecting a bearish expansion in the weekly perspective, then the high of the week most likely form on Tuesday or Wednesday London cues. Okay, so that is the logic. Okay, most of the time. Okay, so take note of that. So let's be looking at this and see how price is moving. So this today I'm selling as we sold in the morning. I'm still selling. Okay, though I don't used to trade on Monday. I don't trade Monday London cues. Okay, my trading day start from it always start from Monday London cues. Okay, till Friday. Sorry, Monday New York Q zone till Friday London Q zone. So I don't trade Friday New York Q zone. So my trading week starts from Monday New York Q zone and to Friday London Q zone. Okay, so that's my trading time frame. And some I don't trade most of the some news, some high impact news. I don't trade like FOMC. I don't trade NFP. I don't trade CPI. Okay, so these are the three core news, high impact news that I don't trade. You understand? So that is it, guys. That is it. So now what I'm looking for is I'll be looking for a sell setup, okay, because the directional bias is still bearish. Okay, the directional bias is still bearish. So I'll be looking out for a sell setup in EURUSD. Okay. So now if price should reverse, I'm expecting to reverse into this FVG, then it will continue to the downside to fill this gap completely into the weekly. As it complete filling the weekly, you can see this weekly gap is very, very large. Then this is the daily. Okay, so price may return to this, though you have popped into it, it may return to this and continue to downside, or we may see a further expansion to the downside. Then the drawn liquidity is this FVG. Then you can see further FVG right here is this to go. Okay, but the first drawn liquidity is to fill this gap completely. Okay, so that's what I'm expecting. So I'm still bearish on EUR USD. I'm still bearish on EUR USD till we see a reversal confirmation, okay, which is a swing low formed before I will determine a reversal to the upside, okay, maybe to reprice the internal liquidity right here. Okay, so that's what we are looking out for this week on the XY and EUR USD. I hope you actually learned a lot.
All right, that is it, guys. That is it for the week. So that's what we'll be looking out for in the XY and USD. Okay, but I want you to know that your strategy is just 10% of your profitability. Okay, so now this week I want to compare you to do something. If you don't have a trading plan, please do well to have that, because most traders, one of the reasons why most traders lose is because they don't have a trading plan. It's just like an architecture, like you're trying to build a house and you don't have any architectural plan for that house, right? Even after building a house, that you have a high chance that that house is going to fall because there's no structure, there's no plan for that. Okay, so that's how the trading plan is very important. So if you're a trader and you don't have a trading plan, you are a gambler. Just note that. Okay, so I want you to do one thing this week. Make sure you have a trading plan. If you're watching me and you don't have a trading plan, okay, and I want you to stick to the process. Stick to the process, okay. Every single day after you do your pre-market analysis, make sure you journal your trade. Very, very important. Journal your trade. Maybe one of these days I'm going to make video on how to journal your trade properly. So you journal your trade, you review your trade, then you learn from it. Okay, the things you know you are doing wrong, then you know if you are going to remove it, or you know the way you do it better. You understand those ones you do better, you know how to improve more on it and do it, make it best. Okay, then you stick to the ones that works mostly for you and remove the ones that doesn't work. Okay, so this is the way you grow. So stick to the process. Stick to the process. So I want to leave you with this, that the profitability you seek is actually in your mind. Okay, it is actually in your mind, following the process. Okay, removing fear. You have a trading plan, you execute based on your trading plan, and you improve every single day. You improve every single day. Okay, so and another person, some person have trading plan, but their problem is in execution. See, once you have a trading plan, you know, okay, this plan have an edge. Make sure you back test it, and for test have enough data that okay, this thing actually works. Maybe in a trade of 10 it works 5 of the time, right? With 1 is to 5, 50% win rate, 1 is to 2 r, you are profitable already. Okay, so once you have a trading plan that works, the next thing is to stick to it. Okay, and execute. Okay, execute as though you never lose. I always tell my students that execute as though you never lose, right? And manage your risk as though you never win. This way you're going to stay ahead. Okay, so I think though this is not a psychology class, but at least this is going to help some of us to do better this week. Okay, so as I said, every single week we always do pre-market analysis every single Monday. So I will drop in some educational content back to back on this YouTube channel. Okay, please do well to share to your friends, subscribe, then like this video, so that YouTube can recommend to others to watch. Okay, and if you have any question or anything related to this thing, you always ask in the Telegram channel, because I think my the link to my direct message is there. Okay, so I wish you all good luck and happy trading. Bye for now.